As the world enters an era of high inflation, it is essential for individuals to invest in ways that will provide for them. It is no secret that inflation is on the rise, and with it comes an increased risk of investment losses. With this in mind, investors are increasingly looking for ways to protect their portfolios. After all, during times of high inflation, it can be challenging to find investments that will preserve purchasing power and provide a good return. Fortunately, there are some strategies that you can use to protect and preserve your capital during inflationary periods. In this video, you will learn the ways to invest during high inflation. Please consider liking and subscribing, especially if you like this type of content. We always appreciate any kind of support. Note that the ideas and suggestions presented in the video are for informational purposes only. Please consult a certified expert first before making any financial decisions. Welcome to EM3 Financial Freedom Strategies, where you can learn how to manage your time and money to achieve financial freedom. If you want to know all the juicy details, then make sure to watch until the very end. Inflation is an increase in the general price level of goods and services in an economy over a period of time. When the general price level rises, each unit of currency buys fewer goods and services. Consequently, inflation reflects a reduction in the purchasing power of money, which means a loss of real value in the medium of exchange and unit of count within an economy. When prices are rising, the same amount of money buys fewer goods and services. This can make it more difficult for people to afford the things they need and want. Additionally, inflation can lead to higher interest rates, which can make it more expensive for individuals and businesses to borrow money. Overall, high levels of inflation can be a problem because they can lead to economic instability and make it more difficult for people to afford products and services. Therefore, in order to pass through this period financially unscathed, or at least with minimal losses, investors thought of investing methods that can help protect their financial state. Without further ado, here are several ways you can do with your investing power even in a time period such as this. Number 1. Investing in companies tested by time. Recession-proof companies are those that are able to maintain their financial stability and continue to generate profits even during an economic downturn. These companies may have strong financials, a diverse customer base, and a solid track record of steady growth. Some examples of industries that may be considered recession-proof include healthcare, utilities, and consumer staples such as food and household products. Specifically, you can think of companies such as Apple, Coca-Cola, Johnson & Johnson, Netflix, and Walmart. Look for companies with strong financials. Companies with strong balance sheets and low levels of debt are more likely to weather an economic downturn. Other than that, think about companies with diverse customer bases as well. Businesses that serve a wide range of customers in different industries and geographic locations are less vulnerable to the effects of a recession. It is also vital to focus on the essentials. Companies that provide products or services that are important to consumers, such as healthcare and utilities, may have better performance. You must also consider finding businesses with a history of steady growth. Companies with a track record of steady growth are more likely to be able to weather high inflation. Number 2. Investing in precious metals. Precious metals such as gold, silver, platinum, and palladium are often considered good investments due to their perceived value and relative rarity. They are also often considered to be a hedge against inflation and economic uncertainty, as their prices tend to hold up well during times of market volatility. If you're considering investing in precious metals, here are a few options you may want to consider. One is to buy physical precious metals. You can purchase physical precious metals in the form of coins, bars, or jewelry. This can be a good option for those who want to hold on to the physical asset and have control over their investment. You can also purchase precious metal mining stocks. You can invest in companies that extract precious metals from the earth through the stock market. This can provide exposure to the precious metals market without the need to physically hold on to the metal. Number 3. Investing in real estate. Real estate investing involves the purchase, ownership, management, and sale of real property for the purpose of generating a profit. It can be a potentially lucrative investment option, but it also carries a significant amount of risk and requires careful planning and management. The value of real estate tends to increase over time, which can help offset the effects of inflation. If you own rental properties, the income you generate from rent may also increase over time as the cost of living rises. You can purchase rental properties and generate income by leasing them to tenants. This can be a good long-term investment strategy, as real estate tends to appreciate over time. If you prefer not to rent your property, then you can choose to flip houses. If you don't want to physically own property because you don't want to be burdened by managing them, then you can also try investing in real estate investment trusts, or REIT. With REIT, investors can purchase shares in a portfolio of real estate assets without needing thousands of capitals for investment. Number 4. Investing in dividend-paying stocks. Dividend stocks are stocks that pay a regular dividend to shareholders. These dividends are typically paid out of a company's profits and can provide a source of income for investors. Many companies pay dividends to their shareholders as a way to share a portion of their profits with the people who helped make the company successful. They do this because it helps encourage investors to continue buying their stock and also helps attract more investors to the business. Many companies increase their dividend payments over time to keep pace with inflation. This can help to preserve the purchasing power of your investment. In addition to providing a source of income, dividend stocks may also provide the potential for capital appreciation as the value of the stock may increase over time. Hopefully, this video gave you an idea of how to protect your money during a period of rising inflation. Do remember that it's very important to do your due diligence and carefully consider the potential risks and rewards before making any investment decisions. Having a rise in inflation can have a huge impact on your investments, and you want to make sure you're prepared to deal with the challenges that come along with it. If you have other investing ideas, especially during high inflation, feel free to hit the comments below and share with us your ideas. As always, we in EM3 wish you the best of luck. In the meantime, we hope you enjoyed watching this video, and don't forget to give a thumbs up if you liked it. Please subscribe if you haven't done so to see more of our content. If you liked our content, then please check out our other videos. Thank you for watching and see you in the next video.